500 people coming in, 1% of that market, those people looking would fill all of our vacancies. And that's exactly what we were doing. We were filling vacancies quick. There were, multiple people who were qualifying, all these wonderful things. The rental market was fantastic. Rents were going up. It was very limited days on market, okay? Now we're seeing a trend. We've had some rentals that have actually been out there 30 to 60 days, which is not good. And doing the things that we used to do are not getting us the results we used to get because the market is changing. So as the market changes, if you keep doing what you used to do, your results are going to change because the market changed. You're doing the same thing, but you're not going to get the same results. Hey, what's up all of my real estate peeps? This is Brian Lucier with another episode of the Why Not Real Estate Podcast, Golden Nugget. On the Golden Nuggets, we'll usually take some tip, tactic, technique, or some other aspect about multifamily, and we'll unpack it and give you our best recommendations or some ideas or a compilation of ideas that you could juggle up and mix up and use whatever you want out of it. Okay, so this series we've been shooting, we just released our spring 2024 executive summary that we shared with all of our clients in the New England area, and we've been unpacking some of the different aspects of that report. Again, it's over 44 pages. There's no way we could put it all into one video unless you really couldn't get to sleep and you wanted to watch something that would help you. So let's not do that, but let's unpack another aspect of that report that we think you're going to find valuable. So we've been in the rental market for quite a few cycles now. Over the past 20 years, we've seen the boom, the bust. We were buying properties at like $40K a unit, which was outrageous. Ended up selling them years later at like 400% of what we paid for them, which is wonderful. It's a great and wonderful story. But that's not what I'm focusing on here. What I'm focusing on is what we learned by going through that market cycle. So our first couple times through market cycles, we had no idea that there were market cycles. We didn't know that there were buyer's market 1, buyer's market 2, sellers 1, sellers 2, and we didn't know how to react in there. So we were buying some properties that we shouldn't probably have been buying, and we were selling, and we figured it out pretty darn quick and became successful real estate investors as soon as we understood what the green lights and red lights were. So here we are. We've been watching the trends in the rental markets right now, and we've been seeing a shift. I think in the last video we talked a little bit about the 5-year trends and the 12-month trailing trend. I would say go back and watch that video. But to sum it up, over the past 5 years, rents have been going up, 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 which has been pulling in all kinds of investors into the market, paying, I believe, way too much for these properties, getting really good high rents, and now we're starting to see the market slowly lose steam. It's been going up, 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 and now we're in 7 different markets or 7 different towns, cities, and for the first time we've seen rents start to level out, and over the past 2 to 3 months we've actually seen a dip. So for me, that's an indicator, and it's time for us to create policies prepared to pivot. That's a PPP, policies preparing to pivot. So what did we see that have alerted us to all this? I'm going to share this with you, okay? So when in the past 5 years, we would get like 300, 400, 500 applications of people wanting to rent an apartment, which was wonderful. I mean, if we had 5 units and 500 people coming in, 1% of that market, those people looking would fill all of our vacancies. And that's exactly what we were doing. We were filling vacancies quick. There were, multiple people who were qualifying, all these wonderful things. The rental market was fantastic. Rents were going up. It was very limited days on market, okay? Now we're seeing a trend. we've had some rentals that have actually been out there 30 to 60 days, which is not good. And doing the things that we used to do are not getting us the results we used to get because the market is changing. So as the market changes, if you keep doing what you used to do, your results are going to change because the market changed. You're doing the same thing, but you're not going to get the same results. So one of the biggest indicators we've seen in our rental business is the days on market for a unit. And we're getting aggressive. We cannot let our units or our clients' units stay vacant. You'll never recoup a lost month of rent. Never. I don't care what you do, that month is gone, you'll never get the money back. You'll never get the time back, it's gone. So, one of the indicators we've seen, days on the market, units staying out there longer, less people applying for the units. There's some other reasons for that as well. One of the other reasons that we were just on a call with one of our landlords for their facilities meeting today. We manage a lot of properties for them, and we walk through all their properties, tell them what we see. And this came up. The question was, why do you think the rents are starting to soften? And one of the reasons, there are several, but is job growth, okay? There's plenty of jobs out there. Plenty of jobs out there. Finding good qualified people to do these jobs is getting more difficult. Getting good people on your team is more difficult. So there's a lot of people out there who have gotten subsidy and rental assistance, and they're kicking it down the road. You know, they know eventually they're going to have to go back to work, but they're waiting to see what other assistance they can get, and we'll talk about that in a minute as well. So right now, job growth is a problem. Now, there's plenty of jobs out there, there's plenty of people to do the jobs out there, but that ceiling of what employers can afford to pay, you know, they're hitting the peak of what they can afford to pay employees. So that means workers and employees are finding it hard pressed to get a raise or make more money unless they want to go out and work multiple jobs. I don't think the market is there yet. I don't think people are feeling that much pain yet to go out and work multiple jobs. Do I think it's coming? Yeah, I think it's going to have to happen. But right now, not yet. So what's that doing to the rental market? It's causing a pause or a little stall on increases. We've been seeing in a lot of the markets 5 to 10% increases, which if you're a property owner, that's wonderful. If you're paying rent, that's not so good for you. And if you're at the same job you were at and you're not getting a rental or an employee increase, a pay increase, then this is a problem for you. And all you have to do is look around. There's signs of recession everywhere. Not just rents, but everything has gone up. Building materials, food, gas, insurance. We've seen utilities double, in some areas almost triple in the past 2 years. Now, I don't know how families are going to find that sustainable. How can you pay $800 a month for heating in an apartment where you're paying $1,300? That's $2,200 right off the bottom line before you put food on the table or gas in the car or a car or insurance. Heaven forbid you get in a car accident, get sick, and get a flat tire because your budget's toast after that and you can't afford to eat, let alone pay rent. So yeah, the job market is definitely a factor in why rents cannot continue to see the growth and climb they've been doing. People are just not making more money than they were making, and it's costing them more money for everything they need to do. Absolutely in the market that we're in, and you probably seeing it in the market that you're in as well. So days on market, we're seeing that to start to extend. Not as many guest cards or applicants or rental candidates coming out into the market. We're seeing that. job growth. People just cannot afford the higher markets. What we've seen in the last 3 or 4 months of rents, what we've been able to get, we're not getting those rents anymore, even 3 months. So, and we'll talk about the next strategy on that in just a second here. But yeah, those factors are definitely hurting rents going up. So we're starting to see it cool down. Now, rental assistance. Don't get me wrong, when COVID happened, we needed rental assistance, and it was a great idea. It kept people in their homes, it kept landlords out of foreclosures, and it kept the whole real estate market, the rental market, from imploding and just going in a place that we don't want it to go. But we don't know. Markets are always cyclable. It will get there eventually, but nobody knows when. So rental assistance was great because it stepped in, the government came in and kept people in their homes. There's still rental assistance, but that slice of the pie is getting smaller and smaller and smaller. But the people wanting a slice of that pie is getting larger and larger and larger, which is causing turbulence of people being able to pay their rent and expecting that the government can come in with some assistance program. Now, back in 2020, all the way from 2020 to whenever you could get into court, and some people took 1.5 years before they could get into court, the government wrote a check and paid all of the arrears. We were seeing landlords getting checks for $10,000, $15,000, $20,000 and being made whole. $20,000 for one unit. Well, if they had 3 or 4 units, the government took care of it. They kept the people in the building. They made the landlords whole. Some landlords got hurt, but for the most part, rental assistance was a good thing. Then I think it started to get abused a little bit. Now, I know masslandlords.net in Massachusetts, they're actually investigating the state of Massachusetts. They get all these millions of dollars in, and they're looking for a spreadsheet. Did all the money go to rental assistance? Nobody wants to step up and give the numbers, but that's a topic and discussion for another video. What is important in this topic, in this video for rental assistance, is it's getting smaller. Last year, I think it was a $10,000 stipend that within a 12-month period, you could get up to $10,000 in rental assistance. I think if it isn't yet, it's going to be set at $7,000. So all those renters out there who got used to, hey, if I get behind in my rent, I'm okay, I have a cushion, I can get the rental assistance, I don't have to take that job making less money yet, I can wait for a job where I make more money, but now those jobs are in flux that we were just talking about, and now rental assistance is starting to be in flux, and the pie is getting smaller. We have seen more evictions in the past 3 months than we have had to do in the past 20 years. I mean, we used to say, yeah, maybe 2 or 3 evictions a year. Now we're seeing 4 to 5, some months have been 7 evictions is starting to become an issue to track all of these. So we've seen the market trend turn already, where now people can't afford the rents, they're not getting the assistance, the jobs, they don't have the quality jobs they should have yet, and that's dangerous. Now, another thing that's out there that's an indicator that we see, and we've seen this in the last couple market cycles, is coupling and decoupling, and we kind of coined that phrase so we could talk about it internally. So what's coupling? Coupling is when you've got a 3 to 4 bedroom unit and you'll have several couples coming together. They're coupling, right? You'll have roommates that will come together. Now, this gets a little tricky because state sanitary code in Massachusetts anyways says that you can't have a rental with more than 3 unrelated people. So how do you do that if you've got 2 unmarried couples, right? Now you have 4 people who are unrelated. So one way around that is if the couples, maybe one is a brother and sister, and the brother's with his girlfriend, and the sister's with her boyfriend. Okay, two of them are related, the other two aren't. You meet the state sanitary code of 3 unrelated people. Yeah, and how do you do that? You've got to ask a lot of questions. There's a tightrope you have to walk to do all that. But why are people doing it? Because you've got these two separate couples. If rent is $2,000, you divvy it up, everyone's able to pay $500 a month. Okay, they can do that. That's manageable. Or that's for a 3-bedroom and they get an extra room. Or if you had 3 roommates paying $700 or just under $788 or $677, whatever it is, almost $700. Now those 3 roommates can afford that $2,000 apartment as well. And this is a trend we see when rents get too high. When the rents get too high, people will combine forces, combine income, they'll live together, they'll learn to live together. Sometimes those little idiosyncrasies of people leaving the toothpaste cap off or the toilet lid up or eating your French fries or your food out of the fridge, tensions build eventually, and we never want to see that happen because it causes drama inside the unit and inside the building if there's that drama bleeding over into the other units. And we always hear the story, well, it's their turn to pay rent, or their turn to pay rent. Our leases are, everyone's responsible. Can't think of the legal expression right now. I'm sure it'll pop into my head. Jointly and severably liable. There it is. Jointly, together, you're all responsible. Severally, individually, you're liable for the full rent. That's what the term is. So coupling is when rents are too high, people come together and they rent larger units to save money. Then, as the market turns and rents start to go down, these couples figure out, hey, you know what, we could go get our own place because we could afford it now. And as the market shifts, then we'll see decoupling. That's an indicator for us that rents have gone down, the market's soft, that the rental market is soft. Right now, we're seeing coupling. So that's an indicator for us that it's getting too expensive for renters to rent, it's getting too expensive to pay rent, and people are going to start pooling together, which would mean the 3 and 4 units are going to become more desirable. And you may, 1-unit bedrooms, always we see in any type of market are rented. Your 2-bedroom units may fluctuate as rents go up or down. So that's kind of where we see that. And then the last, that goes for all markets pretty much in all areas across the United States. This last indicator is definitely Massachusetts specific, but don't be surprised if in your neck of the woods that something like this is happening, and if you're not aware of it, you should really get involved and find out. So, we've got some bad news for landlords. There are a couple Senate bills on the floor of Massachusetts. This has been saber-rattling for a while. They've come up, they've gone down, they've come up, they've gone down. Now the tenant advocacy groups have 2 bills on the tenant floor. They're mirror image, they do the exact same thing. I guess my spin on that is it's bait and switch. If you're watching this bill, you're not watching this one and it gets through. Or if you're watching this bill, your eyes are off this one, less focus and it gets through. So they've got 2 identical bills going through. Under section 193, these bills are H.4138 and H.4356. Sorry, I don't have my glasses on. It's 193 H.4138 and 193 H.4356. What are these trying to do? There's a database in Massachusetts of the eviction records. It's under masscourts.org. And if you go in there today, or at least at the shooting of this video, you can go in and do research on the eviction records and find out if the candidate trying to get into your rental has an eviction history. Now, this should not be, that's it, they had an eviction, I'm not going to rent to them. That's not right, that's not fair. I know in my own life I've had issues of previous divorce, which caused me to go bankrupt. No fault of my own, it just happened. Medical issues happen, car accidents happen, you have to pay for things, school tuition happens, all these things happen. I would say probably the most unknown would be a medical bill. So if you're a tenant and something bad happens in your life and you get a medical bill, it's going to affect your rent. And I've seen it so many times. Now, it's not a bad person who doesn't want to pay rent. It's someone who had to pay a medical bill, and then they turn it around, they get on their feet, they pay their medical bill, and it all goes away. Now, landlords should not be looking at this report saying, that's it, I don't want to rent to them. You should be looking at that report and saying, okay, what happened? I'm human, I get it. Let's have a conversation. Let's figure it out. And if you can show me the medical bills and vouch for all that, great. Let's move forward and rent to the unit. Now, what's been happening is tenants who habitually don't pay rent end up in housing court a lot. And they will have 10, 20. We just evicted someone last month not someone we put in the building, but a tenant we took on, several evictions going on in this building. The last tenant we just evicted was $18,000. How do you get up to $18,000 when there's rental assistance available? I don't know. But right now, the rental assistance isn't going to cover that full amount, so we had no other option but to ask them to leave. So if they pass this bill for eviction ceiling, what happens? Now, we've got this tenant out there, I'm not going to say their name, but they owe a judgment of $18,000. Lo and behold, when we took on this property, we knew that tenant because we'd evicted them before and have a past judgment of a couple $1,000s. So a landlord should be able to go into this database and get that information, say, okay, this particular person habitually doesn't pay rent, they're a high risk. So would I take them? Maybe under certain stipulations, if I could get a letter from the previous landlord saying that they paid off the debt or they're in some payment plan, I'll work with them. It's not going to be a hard no. But if we can't work with them, then I can't rent to them. Now, if they seal the eviction records, you're never going to know that tenant owes $18,000. Let that sink in. You're going to be at risk as a landlord and have no way to screen or vet this tenant. That's really, really bad idea. And there's two bills, so if one doesn't make it, the other one probably will. So that's the first part of the bad news. The second part of the bad news is these bills have a provision to forgive $700 million of debt. So that $18,000 that we just evicted someone for, we got a monetary judgment, that's going to get wiped out. That means even though it's a 27-year judgment, if the state walks in and says, we're just going to cancel out $700 million of debt that landlords won't be able to collect, it's gone. That judgment, that 27-year judgment, you won't be able to collect on. That's really bad news for landlords. So we're working on this, right? We don't know the legal repercussions of what we will and won't be able to do if they do eviction sealing. And I'm not going to put them out here on this video right now because I don't know if they're going to be legal tomorrow or the day after. But we're working on strategies to prepare our policies to pivot. And if these two bills get through, it's really going to shake things up for landlords across Massachusetts. So I hope you were taking some notes. I hope you're seeing these things happen, these trends happen in the market that you're operating in, so you can say to yourself, okay, well, gee, now I know that it's coming, what can I do? And actually the what can I do is something I'm going to address in the next video. But for right now, prepare your policies for a pivot in your rental markets and be prepared for what's coming. Watch this again if you need to review these. But for all of my real estate peeps, This is Brian Lucier from the Why Not Real Estate Podcast, signing off from another Golden Nugget. We'll see you on the next one.